let's get the ball rolling. I know you're a busy dude. I could introduce you and tell everybody how you like long walks on the beaches in your G-string and
White fluffy clouds.
yeah, but for the sake of folks that tune in and just again, Patrick, so you're aware, we've got our whole community that plugs into these podcasts, whether that's through their member portal or YouTube, Apple, Google, Spotify, whatever.
Right.
Because we just want to introduce them to, what are the most effective ways to grow your business and who are the people they need to know. So with that context in mind, why don't you, if you would, take just a couple minutes and introduce yourself, who you are, what you do, why you do it, what's your favorite kind of toothpaste, and
That sounds good. Well, I'm Patrick Cohlberg. I work for Lotus Group Life Settlements. We are a life settlement company based out of Denver, Colorado. I lived in Denver for approximately 22 years. And after COVID, I had purchased a townhome in South Florida to spend more time near my father, who had retired down in South Florida. And then after COVID, it was time for a change. I'd been in Denver for a long time, loved Denver, but it felt like it was time for a change. I think a lot of people felt that after COVID. And so I moved down to South Florida full time. And while being down here, I'd been in medical sales for many, many years. And I also owned a CBD company out in Colorado. And that had come to an end. I had sold my partnership in that company. And I was out golfing with a friend of mine, and he had brought another friend down. And that friend turned out to be the managing partner at Lotus Group Capital, which is also Lotus Group Life Settlements. And he asked me if I would be interested in coming to work for him and doing life settlement sales. And I really didn't know what that was at the time. And so he gave me a 5-minute Cliff Notes version of what life settlements is and said, "Hey, I think you'd be a great fit for the director of policy marketing for Lotus Group Life Settlements. I want you to consider it." And so we spent the next few months talking about it and discussing the plan and what his vision was and where I fit in that vision and that plan. And so now I've been working for Lotus Group Life Settlements as the director of policy marketing for coming up just about 2 years now. And it's been a lot of fun. It's been challenging. It's been rewarding. We're helping a lot of people, not only with selling their life insurance policies and getting those clients money, but we're also helping advisors and agents, start another silo of business for themselves as well, at the same time taking care of their existing client base. So it's been very rewarding in those terms of partnering with advisors and agents and helping their clients at the same time, helping the advisors and agents with their business as well. So that kind of gives you a little overview on where I came from and how I got here.
yeah. So we're gonna dive all the way in, and I mean all the way. I'm gonna ask you questions you've never been asked before. Before we get into some of the mechanics and some other pieces that I would love to hit on. My question is kind of why life settlements, but you've already kind of answered that. So I guess, if you had to go back to 14-year-old Patrick and look 14-year-old Patrick in the eyes and be like, hey, at some point in your life, you're going to be the director of marketing and sales for life insurance settlements. What would 14-year-old Patrick have said to you?
He probably would have thought I was crazy. Not in a bad way, but just that would probably never happen, right? Not that 14-year-old Patrick would know what Patrick was going to do as an adult, but no, I don't think he would have ever thought that. I was probably either going to be a sports psychologist, or I wanted to be in the FBI. And then I took a run at professional hockey officiating for a while as well. So no, younger Patrick would have never really guessed that he would be doing this today. But I've not only, and I use the word rewarding, but it's also been really challenging because I did the same thing for so many years. And I remember my uncle, he was an engineer by training, who was a manufacturer of, air conditioners and those kinds of things. And he got laid off I want to say it was in his 50s. And he went back and started a whole new career as an Edward D. Jones advisor, started his own business, did the whole Edward D. Jones investment advisory. And he built his business from the ground up, started all over in his 50s. And I always think about him because I hadn't challenged myself in many years. I was doing the same thing. I was doing well in life. And I was just the record was on repeat. And so when I took this position, it was something completely different than what I had been doing before. And it was it was a risk, but B, it was a challenge. And I had to change my brain and my behavior on not only how I offer this sale to people, but also just to learn a whole new industry. And I never thought, I just thought I'd kind of keep going down the same path. And I'm not trying to say that I'm proud of myself, but I'm actually proud of myself for taking a risk and really trying to retrain my brain on a new industry. Yeah, I'm still talking to people and helping people, but I'm doing it in a completely different way, and I'm doing it in a financial way. So it's been very challenging, but it's also been very rewarding. And it's, you know, being in my 40s to do this, it's really not been all fun and games. It's a learning curve, and I've enjoyed it, and I think my brain has expanded at the same time.
Well, and what's crazy about that is that it's not just learning about a new industry. Like, it's a super niche market in that industry where people have been selling life insurance for decades. A lot of them don't even really understand the life settlements are an option, what they do, how they work. So it's a super niche market, but it's really no different than any of the other products that advisors have available to them, in that when it's a good fit for your client, man, it is a good fit.
Yep.
And it's the right solution. It's nothing else compares. Somebody has something that
It's like a glove. It does. And
yeah,
offering your clients not only help, but a solution to a problem. And really, that's what you guys do. You offer solutions to problems for people. And this is just yet another solution to a different problem. And it just gives you another avenue, gives you another tool in the toolbox. That's all this is.
it's another tool on Batman's utility belt, another arrow in the quiver.
That's right.
If you think about it, you're still living your childhood dream, Patrick, because you wanted to be a sports psychologist. You're not working with athletes. Like, Lord knows body by insurance is real. However, you are a psychologist. You are constantly talking agents and clients through all their woes. You wanted to be a, hockey referee. You're always skating on thin ice in this business.
Yes.
You're checking these things off. So I feel like, maybe it doesn't look the way you thought it would, but it's exactly what you wished for.
It's solving problems in a different way. Absolutely. So it's very different, but it is very similar. So I guess I'm where I'm supposed to be.
So what's the most significant problem you feel like you helped an agent to solve for their client in the last 3, 6, 12 months?
I'll be honest with you. I'm actually working through it currently. We have a client who has a $2 million, I think it's a $2 million plus life insurance policy that was gifted to him by his parents, who are still alive. And he was expecting let's just say he was expecting a very large amount of money for this policy in the sale of it. And when we started to look at all the variables, we weren't going to be able to meet his expectation of what he felt the policy was worth. But what makes Lotus Group Life Settlements unique is we look at a problem and we look for a solution to that problem from many different angles. And a lot of other companies out there will just kind of be very didactic and very one-way street thought philosophy. And so when we could not reach the expectation of the client, we started to look at other options, and other options meaning something called a retained death benefit. And for you guys and for anyone who's curious as to what a retained death benefit is, that there's a couple of different ways you can do a life settlement. You can sell the policy outright and get cash money for that policy. Okay. And obviously the advisor or the agent gets a fee or commission based off of the sale of that policy. And that will always happen. The agent or the advisor always gets a commission. Okay. So that's been established. However, you have to be able to sell the policy to take care of the client, to solve the problem, and get the commission or the fee. Well, this client was not happy with the amount we were going to get them. So what we did is, and most companies do not offer this, but this is something we offer at Lotus Group Life Settlements, we were able to offer the client cash, a certain amount of money cash. It was less than the original offer. But then what we did is we did something called a retained death benefit. And not every policy qualifies for it, but a lot do. And what that means is that the client or the beneficiary or the insured retains some of the death benefit over a period of time. So instead of just outright selling the policy, what they do is we buy the policy, we give them cash for it, and then we allow them and partner with them to retain a portion of the death benefit. The client is no longer responsible for the premiums. The client does get a cash settlement, and the client will retain a portion or a percentage of the original death benefit. So they may receive less in cash, but they receive, say, half of the death benefit. In this particular example, we were able to get the client not only cash, but then a fairly large amount over a 5-year, basically a declining death benefit because the way the policy was financed. Some are flat RDBs, meaning they have a retained death benefit for the life of the policy, and others are declining death benefits because sometimes the policy has what we call is tail risk, meaning as the policy gets older and older and older, it becomes difficult to continue to finance that policy. And so what we did in this situation is we gave him a declining death benefit for the policy, and it went from $700,000 for first 2 years to $500,000 for the third year to $400,000 for the fourth year to $200,000 for the fifth year, and after the fifth year, the benefit went away. So that's the example of a declining death benefit. Another example would be a flat death benefit or flat RDB, retained death benefit, where it stays $500,000 or $200,000 for the life of the existence of the policy. So in this situation, we were able to get them cash, not as much as the original offer, but we were also be able to get them a 5-year death benefit. The parents of this person are not in very good health. So he said, yes, I'll accept that offer because I'm getting some cash, plus I'm retaining some death benefit for the next 5 years. So it wasn't necessarily an easy fit, but we were able to find them a solution that worked for them. It wasn't about us and what we were doing for our business. It was about how do we help this client get to the place where they feel like they are being helped, but we are still helping ourselves at the same time. And sometimes it's very difficult, but this was an example of where we could do that because we're flexible and we have some options that other companies don't have.
It's a very nuanced solution as opposed to them just picking up the phone and calling JG Wentworth 877 cash now.
Right. And remember, those companies are out there and they do a good job, right? I would never, ever badmouth any company that's out there. However, remember, when you have an advisor or an agent that is involved in this process, then that person can work as a fiduciary, right? They can act as an oversight to this process. And we want that. We want that agent and that advisor involved because then the client not only feels protected, but the agent is actually bringing value, or the advisor is bringing value, a value proposition to that transaction, right? So the client feels taken care of. The advisor or the agent feels like they're doing their due diligence and they're watching over their client, making sure it's a good deal, it's a good situation, it fits the client's needs. That's what we're here to do. We're not here just to sell life insurance policies. We are here to help people. There's a difference between just buying life insurance policies and taking the money and running. We're not interested in that because we want to work with the agents and the advisors over a long period of time. We don't want to just do one deal.
So you said something that got me thinking that it might be good to clarify. So with life settlements, a lot of times I think my default thinking on it is it's somebody older that's not in fantastic health, that has a life policy that they're maybe thinking about giving up on because maybe they can't afford it or they don't see the need for it anymore. But you said something in this case that kind of sparked my interest that I think might be good to kind of expand on a little bit. You said he was gifted a policy. So tell me who was the original owner insured on the policy, and how did he come to own this policy? And is that a fairly common thing that you run into with somebody being gifted a policy, or is it more of a one-off kind of thing?
It was. So it was in an irrevocable trust that the son was given the beneficiary of the trust. He was the owner of the policy and the beneficiary of the trust. So it was up to the son to sell the policy if he wanted to or not. He could also keep paying on the policy and keep the policy in existence, and he could keep it going. His choice was that the premiums were going to go up so high that he decided it wasn't worth the money he was going to have to invest to keep that policy going. But to answer your original question, yes, a lot of times some of these policies are gifted to individuals, families, trusts, charities, you name it, right? And so we deal with everyone from the person who has, anything above $100,000 policy is eligible for a life settlement. So we deal with anything from a person who has $100,000, term policy to people that have 2.5 or 5 million or $10 million universal policies or whole life policies. And yes, a lot of times, no, I shouldn't say a lot of times, a significant amount of times is involved in a trust or a will or what have you. So it's more common than you think.
What if you had to pick just like 2 or 3, what are maybe the 2 or 3 most common reasons somebody would sell their life insurance policy or would maybe consider it that are legitimate reasons? Because, I mean, like many industries, the life settlement world has been fraught with a little bit of controversy over, is this a ethical thing to do or not? And it certainly is. But, if we're sticking to just, hey, this is 100% above board, what are maybe the top 2 or 3 reasons why a person would even consider it, or why an agent and advisor should maybe, have their clients start chatting with y'all?
I would say probably the number one reason is cost. As people get older, then this obviously depends on the type of policy, right? But most of the time, as people get older, and they have these policies, the premiums start to really go a lot higher as they get older. So a lot of people are older, and either they're okay in life, maybe their children don't need it, and they look at it and say, I just don't need to keep paying on this, right? So cost is one of the biggest reasons. I'd say maybe the second biggest reason is once again, it goes back to money, but it's the opposite. People want to take some money out of the policy, right? They say, hey, I can do something with this money in life. I can give this to my kids, or I can take a trip, or we had some people that needed a new roof on their house and they couldn't afford it. That was what it came down to for them. The roof was going to cost $120,000 or some number like that. And they had a policy that they were going to let lapse. They were already past the policy. Like, we're not going to keep paying on it. And the agent called me up and said, hey, I've got this couple. They need some money and they're going to let this policy go regardless. So is there anything you could do for them? I think we ended up getting them close to $80,000 for the policy. So I would say that the top 2 reasons are really money. Either A, the premiums are getting too much and people don't want to afford them, right? Because let's be honest, if you have people that are getting older, the cost of living has skyrocketed. Inflation has skyrocketed. We know this stuff, right? I mean, if anybody's bought groceries recently or anything, or tried to buy a house or anything, you know this. So when people are looking at, are they going to pay for their mortgage? Are they going to pay for their car? Are they going to pay for their medicine? Are they going to pay for their food? Yeah, they're going to pay for all those things because those are basic needs of life, right? But a lot of times people get to that point and they say, well, this life insurance policy is no longer a basic need of life. I've had it for X number of years. I could get some money out of it. I'm going to do something with it. Now, you may have some wealthier clients who maybe they want to do something with that money. Maybe they want to, give it to their kids. I had a woman who had multiple life insurance policies, and she had a daughter that was in her 60s and needed some money. So she sold one of the 3 policies to us so she could give her daughter some money. So I don't want it to sound like the reason that people sell these is money, 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 but finances come into play, I would say, more times than not on these because of whatever reason, whether they don't want to afford it, whether they want to do something with the money. I would say that's probably the biggest thing. Those are the top reasons. The other reason is I'd say number 3 is probably they just don't need it anymore. They've gotten to a point in their life where they don't need it. Their kids are older. They don't have the dependents that they used to have, and they just don't need the policy anymore. And so to keep paying on it, they're just like, yeah, we don't need this anymore. And so a lot of times, unfortunately, people just lapse their policies. When you lapse the policy, it just goes away. And all the money you paid all those years just disappears. Well, we can help that client of yours recoup their premiums, or maybe even more than the premiums. So I don't know anybody that if you say, hey, I can get you money for this policy, if you're going to just lapse it, who's going to say, no, I'm not interested.
It's like having a family heirloom that you think is worthless and they throw away and they go to the Antiques Roadshow. It's like, hey, you could actually get $10,000 for that. It's like this thing, if they're pulling it back out of the trash, like, oh,
Right.
this thing has value? Like, yeah, it does.
And I'll give you the statistic. More than 50% of the people in the United States that own life insurance do not know they can sell it. That number is probably closer to 60 or 70%. Have no idea that they can sell it. that it is theirs, that it is their property. If that policy is active and they are paying on it or have paid on it, and it's an active policy, they own that policy. It is their property, and they can do what they see fit with it.
I'm curious, talking about statistics, do you have any idea what number of policies end up lapsing that could have gone through the life settlement channel?
Yeah, and I can pull that number for you. I don't have
Rough numbers.
I want to say that only 1 in 4 policies in life insurance policies in the United States, and the number's probably lower than that. Okay, I want to say the number's lower than that. 1 in 4 ever get paid out. So I think the number is lower than 25%. I'm almost certain of that number. I think it's like maybe 12 or 13% of policies that are bought ever get paid out. So you've got people paying over all these years, and then they either lapse it or, they just don't do anything with it. So it served its purpose during its time because there were dependents and people that needed the protection, but you get to a certain point in life and you don't have those needs anymore. And to just let it go versus getting something out of it, it seems like a silly idea.
So inevitably, when we're talking to agents, and we talk to hundreds and thousands of agents, and we bring something like this up, and we mention, hey, you have this life policy, it's later in life, you need some money, so let's settle the policy. And you're selling a $500,000 policy, and you're going to get $50,000 for this $500,000 policy, right? Yeah, and then I'm just throwing numbers out there. But that agent almost there's 2 reasons why they wouldn't. The first reason why they're going to say no is because they're going to say, well, the policy should have cash value. You should just take a loan. So that's the first thing we're going to come up against. The second one is going to be something to the effect of, well, it's just a term policy anyway, so it doesn't even matter. What do you have to say to those agents under those 2 circumstances? Either A, the policy should have cash value in it at that point, so why not just take a loan? And B, it's just term.
Couple of things. First, if there is cash value, right, we have to offer more than the cash value, first of all, okay? And I just had some policies that came across my desk the other day. There was too much cash value in the policy, and our advice was take the cash value. Simple as that. We need to be able to get above that cash value number. And yeah, if someone has a cash value, has a policy with cash value in it, terrific, great for them, right? We don't obviously buy policies unless we get above that. But in a lot of situations, because there's cash value, we can sell it or buy it, I should say, for more than that cash value. So that kind of solves the problem. Either they're in a really good situation with cash value, or we're going to be able to get them more than the cash value. It's a win-win for that client right there. To have those choices, those are really good choices to have. And then your second question was, say it again.
With, it's just a term insurance policy.
Yeah. So we will look at term that converts, group policies, IULs and VULs, depending on their finance, joint couple policies, key man business policies, whole life, universal life. We will look at basically anything. Now, every policy is a little bit different. Every policy is structured a little bit differently. Every policy is financed a little bit differently. A lot of things depend. Those variables come into play. The sweet spot is 75 years of age and above, and anything that's $100,000 net death benefit above. If it's below 75, age of 75, we can definitely still sell some of those. They just have to have more health conditions. So every policy is a little bit different. They're financed differently. The age of the client is different. The health of the client is different. There's a lot of variables that go into that. But what we do is we actually will price policies for agents, for advisors at no charge to the client, no charge to the advisor. We'll let people know if there's value in it. And if there is, terrific. And if there's not, no harm, no foul.
The big thing, though, is that for me, this opens the door to have another conversation with clients that would not talk to me about life insurance before, because when I brought it up, they said, oh, Peter, thank you so much, but we've got that taken care of. We have a life policy, right? And so number one, that allows me to bring more value without expectation, because I can have an intelligent conversation with them. And in doing that policy review, because even though I didn't write it, that's value that I can bring to my clients. Hey, do me a favor. I bet you your policy is doing wonderfully. When was the last time that you actually got an in-force illustration on that thing and took a look at that policy with a licensed professional? The answer to that question is probably the day you bought it, right? And so I'm giving you the opportunity, hey, if there was going to be a problem with this thing, when do you want to know about it? Would you rather know about it today or 20 years from now?
Yeah, and that also the sooner we check on those policies, the better off we are because we have more options the earlier you look.
Flexibility, absolute
Flexibility. And I'm not here to say that people have a firm grip on their data or they don't have a firm grip on their data.
I'll say it. They don't. They don't.
Remember, people are lapsing policies every single day. And to not ask that question, hey, how are your life insurance policies? Have you done a review on them? Would you like to do a review on them? There's several thoughts that pop up. Number one, all the advisors and agents need to know they can still sell the policy even if they didn't sell the policy originally. So they can sell it around even though they didn't sell the original one. Number one, because they just become the agent of record. That's the first thing. The second thing is, if you're not doing a review with these people, they may be lapsing. And so not only is the client, you're doing a disservice to the client because the client's not thinking about it. The client doesn't know about it and it just lapses and out the door goes, right? The client misses out on that money. All right. And not that, money is everything, but we're trying to help clients, but agents and advisors are trying to help themselves too. They just watch revenue walk out the door. So we've got multiple things going on. We've got the clients losing money and missing the opportunity. We've got agents and advisors missing out on the opportunity to have a conversation, expand the business conversation with that client, and potentially missing out on revenue with that client for new business and for selling this policy. So there's a lot of different facets here, and it's as simple as, like you said, Peter, hey, have you done a review of your life insurance policy? Where are you at with that? You still paying on it? You still have it? What's going on? What are your thoughts?
If there was going to be a problem with it, when would you want to know about it?
Yeah. I mean, I think, when I was officiating hockey, I was one of the top young hockey officials in the United States at one point. And we would go to USA Hockey, would put on Olympic development camps. They were basically Olympic/professional development camps for on-ice referees and officials. And I remember the first camp I went to, one of the NHL referees came in and he put 6 P's up on the chalkboard. I'll never forget this. And he said, does anyone in here know what these 6 P's stand for? Nobody knew, right? And he said, these are the 6 P's of success. Prior planning prevents piss poor performance. So if we are doing things ahead of time, we are planning for the future, then these situations don't sneak up on us. And I can't tell you how many phone calls I've had. Oh, they just lapsed the policy. It just went into lapse or whatever it might be. Oh, they just canceled it, right? I wish I would have known about this 6 months ago. And that's fair, right? Now you do know about it. But if we're checking in our clients, we're doing things on a regular basis, you're finding opportunities for new business and you're finding opportunities for new business with maybe potentially selling their life insurance policy for them.
So this isn't about, because reverse mortgages, for example, get a really bad name because of some shit that went down back in the day.
I blame the Fonz. Arthur Fonzarelli, he did it.
Life settlements, or a lot of folks will call them viaticals, have some similar shade. But at this point, with what you're talking about, it's not about that at all. It's about verifiably, contractually, we're going to get people into money they otherwise would not have. It's not we're not talking them out of a policy that was going to pay and give them hundreds of thousands or millions. We're talking them into taking a policy they were going to walk away from anyways and taking tens of thousands or hundreds of thousands for it when they were going to walk away. It's a totally different context to the conversation at this point. Is that kind of what I'm picking up?
Yeah, it's really what it is. It's found money. It's found money that people don't realize that they have. And let's remember, no one's being forced to do anything here. Like if we get a policy and we make an offer on it or say this is what it's worth, doesn't mean they have to sell it. It just means they're now knowledgeable in the fact. They have the knowledge that they didn't have before, that their policy has value. There is money in that policy. Now, if they decide to continue, paying on it and keep it active, wonderful. That's what fits their lifestyle and their choices. Perfect. Wonderful. But now you have an opportunity and another avenue to expand on your choices, your financial choices for you and your family through life settlements. It's just another option, and it's there. It's completely above board now. Obviously you said there were some things that were on the past, but it's not like that anymore. It's just not. These are above board, and we're regulated, and it's just another avenue for people. Not trying to force it.
I think for anybody that's having a hard time wrapping their brain around this concept, I think the key that unlocks the door for them is, have you ever heard of something called an accelerated benefit rider? That is literally the insurance companies, when agreements were happening, that was the insurance carriers going, wait a second, we could offer somebody a little bit less than the death benefit that we're on the hook for if we pay out money in advance. That was the insurance carriers' workaround on really trying to mitigate that whole process. That's what ABRs are. It's the same basic concept. So it's not a foreign concept that advisors haven't run into. They might not have come across this particular flavor yet, but it's no different than a client utilizing it like an ABR.
Right. And let's remember, these policies were sold, life insurance policies were sold to pay out. That's the way they were set up. They were set up to pay out. End of sentence.
This is a total off-topic question, and it's not off-topic. It's on topic, but kind of off the wall. Just as you're talking, have you ever had an experience or a scenario where you could take somebody with a term life policy, for example? So a term life policy, there's no cash value associated. I can't put it on my balance sheet as a business owner. You'd mentioned He-Man policy. Could I work with somebody like y'all? Given the circumstances were correct, I need to be, certain age plus. Usually y'all want like what, 70 plus? Yeah, I'm right.
70, 75 plus is the golden thing. No, 70, even 70 plus with some health conditions.
So if I had an older business owner that was like on the cusp of needing a loan from the SBA or needing this or needing that, and they just needed to improve their balance sheet a little bit, could they get a valuation from y'all and get the real dollar value on their Keyman term life policies and add that to their balance sheet? Does that make sense?
Real dollar value, that's the part I don't understand.
So real dollar value, in other words, on a term life policy, I can't put it on my balance sheet because the money only exists if I die, right?
Right.
Versus a life settlement offer, maybe I have $1 million policy, but y'all are willing to give me $100,000 for it today. Could I put that $100,000 on my balance sheet to help collateralize a loan, for example?
Because basically you got an appraisal on the value of it today.
Here's what you would need. The answer to that question is, I don't know the answer specifically, but what I will say, because that would be a banking question, and I'm not an accountant.
The answer is ask your CPA.
Ask your CPAs. However, if you hadn't brought us, obviously we're in the business of buying life insurance policies, right? So we don't necessarily want people using that as a function to get, we're in the business of making, transactions. So the answer to the question is, I believe that if we went to auction and bought the policy and did everything we needed to do, and you had the offer, I don't see why not. But once again, I'm not a CPA, but yes, ask the CPA that question. I think there'd have to be something in writing, obviously, that there is value and that someone is purchasing that policy for X amount, but I don't see why not.
Yeah, well, and we're certainly not, and I guess I apologize. I didn't mean to set you up for failure with that question.
Yes, he did. He did it on purpose. He winked at me. He was like, here it comes, Peter. Oh, no, it comes. Here's the watermelon.
So the big reason I ask, it's not because I want agents or clients to go and abuse y'all to get an offer to put on a balance sheet or anything like that. The big reason I ask is, if it's an asset that we could most likely do that with, then it is in fact an asset.
It is an asset.
So like you're talking about, like Peter's talking about, that it literally tangibly exists. We're taking something that prior had no value and making the value tangible and accessible, which is cool. So again, I'd not for folks to come and take advantage of y'all, but just to see.
Here's the other thing is that gets even more interesting with say like a retained death benefit, right? Because then you're talking about something else. You're talking about getting cash and a death benefit. That's, depending on what it's financed, is it guaranteed? Is it a declining death benefit? You've got cash. So yeah, that's it becomes a very interesting question for an accountant or a CPA to answer, which I am neither, but or a tax attorney, just for full disclosure. But yeah, it becomes a very interesting question, especially in the case of a retained death benefit, because then you've got something that's, once again, there's value in something. You've got gas.
I like the retained death benefit. I'm spinning up all sorts of advanced case scenarios right now, just so you're aware.
No, I mean, we've actually started to focus. We feel that with our recent experience with the declining death benefit and the retained death benefit, that we feel that it's a very underutilized and underserviced part of the market. And we've had multiple situations where it's come up now and people are very interested. And so we are starting to focus on that more and trying to give an RDB and a declining RDB in almost all situations as an offer to clients in addition to what we're offering.
So like an A and a B, like here's a flat face offer, here's an offer with retained death benefit.
Here's your full cash offer. Here's your, we can do you a flat retained death benefit, and we can do a declining death benefit. And we are just giving people the option, and it's really, we're really getting great feedback on it. And we're closing deals that we would have lost in the past. And now we're closing deals that we would have never finalized before.
Because y'all are solving problems that you weren't previously solving, right?
Correct. It's all about it. Whether it doesn't, I don't think it matters what business you're in. If you're in the business of solving problems, people are interested in that. And especially from a customer service perspective, I think customer service is definitely a lost art form in general in the world now. And so if you are going the extra mile and you are solving those problems for people, I think they respect that.
So speaking of solving problems, kind of another little pivot here. I know I'm all over the board, but I think this one's highly important. It's one of the reasons I love what y'all do so much. I think there's so much value. Insurance agents spend their whole life, their career, maybe not their whole life, because none of us woke up at 14 and we were like, I'm going to do insurance. But they spend their whole career talking folks into buying a policy because they want it and they need it, presumably, right? They need it, they want it, they can afford it. But now with the premise of a life settlement, we're talking them out of an insurance policy. Many agents don't know where to start, how to have the conversation. Let's say they put together a book of business and they have 1,000 home and auto clients in St. George, Utah, where it's 70% retirees, or Florida, or other places, or maybe they're a Medicare agent where 100% of their clients are 65 plus, right? How do you take somebody, what is it y'all do? And I kind of know the answer to this, so I'm kind of loading the question here, and I'm sure you see where I'm going with this. What is it y'all do to help somebody, an agent who's spent their whole career talking people into buying more insurance, and help them to show their clients the value in selling the insurance they previously bought?
Couple things. One is, and correct me if I'm wrong, but you guys usually sell insurance, and then it's kind of, you do the transaction, you make the money, and then that's pretty much it, right? You may or may not see that client again. They may come back for more things, but this gives you an opportunity to go back to those clients and provide them another service that you didn't have before. To answer your question of how do you teach or educate agents on this? First of all, if you have entrepreneurial agents, they should be all about this, because you are helping your clients, but you are reservicing or servicing your existing business, right? And it's the leaky bucket syndrome, right, of sales. Is you sell, but that bucket just keeps there's no bottom in the bucket, right? And it just keeps going down and down and down. You got to keep refilling the bucket. This is a situation where instead of it dropping out the end of the bucket, you can just reach in and there's a bottom in the bucket. You just pull out a client and say, hey, wow, not only am I helping the client, but I just found some revenue here. Okay. Off of existing business, right? You sold them something on the front end. You made money on that. Now you're selling them some of them back end. And you're making money on that. At both transactions, you're helping the client. You help them get insurance, and now you're helping them sell the insurance, right? To answer, I think, a deeper question you're asking is, how do you get these people engaged in this process? Couple things. One, we've actually changed the program that we spoke with you guys about before, and now we're offering $300 for any policy that is submitted for a client at age 75 and above. Not two, not three, one. If people submit in the first quarter, I will say February, March, April, because January is kind of already gone. But if you submit in February, March, and April of this year, we will pay for every policy that's a person over the age of 75 and qualifies for a death benefit of over $100,000. We'll pay that agent or that advisor $300. Number one.
Whether we don't make an offer on the policy or not.
Even if we don't make an offer on the policy. If it's a qualified policy meaning A, 75 years of age and above, and B, it's a net death benefit of $100,000 or more. Those are the two qualifiers. That's it. That's the first thing. The second thing is we have a marketing program that we can hand to the agent or advisor where they can send it out as a mailer. They can email it to their clients, whatever it is, right? They can do that to get people to call in. So the leads for life settlements are coming in instead of going out and finding them. Okay. So that's another avenue where we can get people interested. And then back to what Peter and I talked about a little earlier. If they have a grip on their data, if they know their clients, they can simply just go through their book of business and start calling people they know that have life insurance. And if they don't have that, that's okay too. You just send out a mailer, you send out an email, try to get people interested. And back to the original question, how do you have that conversation? It's as simple as, hey, I'm doing a status checkup with you about your life insurance policy, any other life insurance policies you might have, whatever it might be. If you do, if you don't, you know what? I've just been introduced to this new program where you're eligible to sell your life insurance policy for cash. You may or may not be interested, but I wanted to check with you and see where you stand if you have a life insurance policy. That's it. That's all you have to do, because that's the conversation starter. Then A, you're going to find out what they think about their life insurance policy. B, you're going to find out if they do have a life insurance policy if you didn't know about it. C, you're going to spark their interest. The whole conversation goes from there. It's literally, do you have a life insurance policy? What are you doing with it? What are your plans for it? Do you have plans? Do you know what you're going to do? Have the plans changed? That's it. Open-ended questions. That's it. See what they say.
If somebody wanted to talk to you more about doing one of these agreements or had some questions, what's the best way for them to get a hold of you?
Best way to get a hold of me is either my email address, which is patrick@lotusgroupcapital.com, or at my cell phone at 303-579-2705. And they can also go to our website. It's lotusgrouplifesettlements.com. All my information is on there as well. So there's multiple avenues to get a hold of me. And then obviously you guys have my information you can share with people as well. Pretty easy to get a hold of me. Text, call, email, go to our website.
Hey, Carson, they're on the Free Sources website, right?
Yeah. Yeah. So for anybody that's in our network, you can just go to revagencysyndicate.com/free sources instead of resources. This is a Peter joke. So you have Peter to thank for this. Free sources, FREE sources. And you'll find Lotus Group there. And they are phenomenal. Patrick, what else before we close out today? I want to be respectful of your time. Is there anything else you would like to share with agents, advisors, or honestly, we get a bunch of folks that want to buy insurance or that have insurance. We get a lot of clients that tune into what we do as well.
Yeah, I just think that the only thing I could probably emphasize or get across to people is you're never obligated. We are here as a resource to help people. We are here as a resource to help educate people on life settlements. We are not interested in just buying life insurance policies and that's it. We want to help people as well. We want to solve problems, because if we do that, the business will take care of itself. But it may sound like a difficult and scary process. It's really not. It's really not that much work. We do most of the heavy lifting. It's really just a little bit of paperwork and a couple phone calls and a couple emails to find out if the policy has value. And none of this is none of it. There's a charge involved. There's no charge to the clients, to the advisors. We're here to help, and we can help guide you through that process really easily and make it as least amount of pain as possible. And we like to make sure that the clients are taken care of no matter what, and the advisors are taken care of as well. So that's probably all I can say is don't be scared of the process, and don't be scared of the possibility. It's really quite easy. It takes a little bit of time. I'll be honest with you about that. It's not something that happens overnight. It's usually about a 2 to 3 month process just to get all the paperwork and get everything filled out. But it's really not that difficult. And if people are interested, we're here to help, facilitate the process and make it as easy as possible.
Yeah. I love that. Love that. Peter, anything else before we close out?
Oh, Patrick, great seeing you again.
All ready to see you guys. Thanks for having me on, and I really appreciate you letting me talk with your advisors and agents about life settlements, and hope we can help as many people as possible.
Oh, me too. Me too. We'll get some folks your way
Me
for sure.
too.
Appreciate you.